Right, what else are we looking at? Work smart, not hard. I like this. This should be life mantra. We should get TV. We should get T-shirts made up with this on. Were there times that your trades were going terribly wrong, and you also weren't in the best mental state to start with? What did you do to come out of it? Okay, work smart. This is a very good psychological question. So, first of all, yes, throughout the year, there will be times where your trades do not go to plan. Maybe it equates to a losing month. Okay, you can have them. Yeah, it's okay. As long as you have more winning months, a losing month is manageable. As long as it's not a huge losing month, right? But that's something different, okay? But yes, I have had, January, yeah, has been difficult. Yeah, it's been a difficult trading environment because price is just whipsawing. All right. So yes, every trader will, you see these things that I have a 98% win rate. No, you don't. Yeah, you don't. And if you do, please let me know. So yes, you are going to have trades that go, and terribly wrong is the wrong word, because they don't go terribly wrong unless you terribly trade. So every trade I enter, I enter with a view to it being successful. I plan my trade, I see market reactions, and I trade. So it could never go terribly wrong because I followed my plan, I've taken the trade according to what I'm reading in terms of price action, and I've followed my risk management. So it can never go terribly wrong if you do those things, right? But when you have a run of bad results, what do you do? So the answer really is keep doing the same, because as traders, I know over the space of 6 months or even a year, I will be profitable. Okay. Over the space of a month or 2 months, I might not be. So it's that longevity that makes me just carry on doing the same thing. Okay, but a lot of you might not have that longevity to benchmark against. But you have to be consistent. Yeah, if I have a bad month, I don't change anything. I don't start reducing size or changing my strategy. I might take profits a bit quicker, but other than that, I'm not changing anything. Yeah, and that is your edge. Yeah, because if you follow your money management, you follow your strategy, and you keep your psychology under control, then your edge over a period of time will play out. Whereas if I have a bad month and I'm like, oh no, this is crap, this is terrible, I'm going to change this, I'm going to start introducing this indicator, or I'm going to, then that is when things go really wrong. That's when you're going to start chasing your tail and spiral. Yeah, because you haven't give your system enough time to prove itself to you. All right, so trust in, I guess it, I was going to say trust in yourself reading the charts, but obviously that's what you need to focus on, and your confidence will come from that. Yeah, if you're confident you can read a chart, in the things I always say in terms of, trend, market structure, support resistance levels, candlesticks, and this concept of value and this top-down approach. If you can confidently read the market using those things, then that will give you the confidence to keep doing the same things. Yeah, because it will eventually, you'll see results, you'll see consistency. So yes, everyone's going to have a bad period. The worst thing you can do is start changing everything. Give your strategy and what you're doing time to prove itself to you. Yeah, if after 3-4 months it's not going anywhere, then okay, think about tweaking it or changing the system, but give it time. Imaginary, I've entered in a crazy pair and now it's acting like I'm the crazy one. Trading is going to kill somebody. Guys, well, trading is one of the most difficult psychological pursuits you're ever going to do, right? So let's carry on psychology, right? We had Piers on yesterday talking about psychology on our podcast, and I really enjoyed it. And, he brought some things to light to me. And if you haven't seen it, check out the podcast from yesterday, guys, right? But the problem with trading, well, not the problem, but the consequence of trading is, every decision, basically means you make money or lose money. Yeah. So that is quite a difficult thing to accept, first and foremost. All right. So I'm going back to years ago and things that I needed to sort of assess myself. So you need to understand that every decision you make is going to make money or lose money. But then you need to forget that, right? Because it doesn't matter about the money. It's all percentages, this game, right? If you can make 1% a week, you are doing marvelous. Yeah, that's 4% a month. If and you're probably thinking, 1%, that's not a lot of money for my account. It might not be, but really, if you make 1% a month, a week, 4% a month, you are a very, very good trader. And just think of it in percentages. This link with money that has been drummed into you from day one. Like your parents were like, you've got to save your pocket money so that you can buy something. Or even at work, I'm more productive at work, I get a pay increase. Everything you do is driven by money, whereas trading cannot be. You have to break that bond you have with money. Okay. Now that's not to say you do not follow risk management like a strict Jedi master. You must, but you've got to not associate it with money. It's just, you think of it, I say to some of my mentorship guys, you're trading peanuts. I'm going to put 1 peanut on this trade. I'm risking 1 peanut, or I'm risking, 1.5 peanuts, right? It's not money. Okay, so you need to break that first and foremost. And what other things do we have? And this, also things you need to break is this, guy. So all your life, if you work harder, you generally make more money, or get promotions at work, or whatever it might be. Again, you need to break that thing that's been taught to you all your life is effing tricky to break, but you have to break it, because you're not here. People think, new traders think, they sit down and they think, right, I've got to trade, I've got to make some money. Right, I see a trade here, I'm buying this. Right, okay, next one. I've got a trade, and before you know it, you're in 4 or 5 trades and you're lost. Okay, so less is more with trading. Someone said work smart, not hard. This is very true of trading. You need to be smart with your decisions, your trade decisions. Okay, and how do we get smart with our trade decisions? We get as much information and data as we can, right? If you're going to make a business decision, you're not just going to, there's one piece of data, right, I'm going to buy this company. No, you are going to do your homework. You are going to get all the data, all the stats you can to make a decision. And trading's no different. If you're impulsively jumping into trades, it's going to end badly. You want to take your time, you want to crunch all the data, you want to plan your trade before it even happens, and then trade. Like I always say, guys, I want dull and boring like my ex-girlfriend. I'm only joking. But I do. I want dull and boring every day. Yeah, dull and boring. Today, if I don't get a trade, no problem. Tomorrow, if I get one trade, okay, I take one trade. Next day, don't get a trade, no problem. Next day, I get two trades. Okay, fine. But, you know, I don't dictate that. You know, I don't dictate the frequency of my trades. The market dictates the frequency of my trades, and if it gives me a setup. So yeah, there's lots of things you need to break in your brain with trading. Yeah, less is more. Break this association with money, especially when you start trading big money. Okay, and this is a thing as well, guys. So if you think of it as money, you're going to have a problem, and on both ends of the spectrum. Okay, I'm going off on one. Let me have a drink, and I'm going to continue going off on one. Yeah, bear with me. So on both ends of the spectrum, right? If you get to a good, consistent level of trader, and you will end up putting big amounts of money on a trade. Okay, so you know, if you see a trade $1,000 offside, then this brings its own, you know, psychological problems with it. Yeah. So if you just see that $1,000 as 1%, then that psychological problem's gone away. You know, so that association with money you need to break. You're just like, right, okay, that trade was minus 1%, no problem. You know, don't look at your P&L. Yeah. You know, that will help you trade bigger amounts. Yeah, it's just a percentage of your account. It's not money, it's a percentage. Now, the flip side is if you trade very little. I know a lot of traders, right? And, you know, they're just, you know, let's say they're doing £20 a trade, right? And they're like, okay, I made £20 today. Tomorrow I didn't have a trade. The following day I made another £20. The other day I lost £20. You know, the thing with small amounts, again, is the fact that you become carefree. Yeah, there's not enough money on the trade for you to care about, and the trade isn't precious enough. So every trade that you have is precious. Yeah, and every trade is worth 1%. Doesn't matter what the account size is. Yeah, we deal in percentages. But every trade is precious. Do not be frivolous with them. And when you are frivolous is when you don't have enough money on the trade. Yeah, you know, I mentor traders, and they'll be, you know, I've entered 4 or 5 trades, and it's fine. And they're like, oh, I'm only at minus $40, and I'm like, okay, but you know, it feels like you're entering those trades because you're not taking the money seriously. Yeah. You know, so you've got to be careful of both ends of them spectrums. You know, every trade is precious. Put on enough to make it precious, but keep within, you know, your account size and risk management. Yeah, so there you go, guys. I was just rambling along there. So yeah, but hopefully some of those things you can relate to and can help you in your trading.